The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the November 5th, the wonderful Wednesday edition of the second hour of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a fabulous start of your day. Let's make sure that you and I, that we do everything that we can to have a wonderful Wednesday. And let's always remember that what's talked about is a dream. What's envisioned, well, that is just darn right exciting. What's planned? That becomes possible. What's scheduled, folks, though? That becomes real. And I want to thank you for scheduling your time with me here this morning. I am grateful for your presence. I'm here to service you. So give me a call at 877-927-6648 or internationally, 727-445-1044. Remember, if you've got a question, somebody else has that same question. So don't call in for me. Don't call in for you. Call in for somebody else. A random act of kindness out there. This is Wonderful Wednesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading up 54 points. She's trading out at 17,437. The S&P up 7 points, trading out at 2019. The NASDAQ Composite up 5, trading at 46.28. The Russell 2000 up 4 points. She's trading out at 11.69. The DAX up 126. The FTSE up 61. Goldilocks down 25 bucks. Silver off 60 cents. Light sweet crude up 48 pennies out here, leading the charge. The upside, Priceline up 8 bucks. No big deal out there. That jazzy one, Jazz Pharmaceuticals up 7.50. Magna International, MGA up $6.40. EOG up 5 bucks. BlackRock up $5. Criteo up 5 bucks, up 19%. In that case, Visa up $4 and change. Stratasys, the big leader to the downside out here. We didn't spend a single solitary moment taking a look at any of the individual stocks during the last hour. So we just saved that for this hour, for hour number 2. TripAdvisor's down 10 bucks this morning, off 12%. Chewy's Holdings getting chewed up this morning, down 28%. Pioneer Natural Resources, PXD, off 4.5%, down $8. So lots for us to look at, to the upside and to the downside. We might as well do that while this market just kind of churns, in essence, sideways. I wouldn't be surprised to see it closed right about here inside of the markets. But I'm not going to project what the 4 p.m. time frame looks like. Just going to project what it's going to look like for the next, maybe today's Wednesday, 10 trading sessions for the next 2 weeks. Nothing but a slow grind sideways out there. Now, that is not the case in some of these stocks here that are popping and dropping. So let's first start off. Let's go take a look at the ETF structures. So let's go do that. ETF for the indices out here. Let's go take a look at the Dow Diamonds, see what the Dow Diamonds are doing. Right now, they're trading up by 71 cents, trading out 174.19 out here. What do we know about the Dow? Well, we know the Dow had a swing point from September 19th, volume of 9.3 million shares. You gapped up above it. You did it with 7 million shares. You stayed above with 5 million shares. Yesterday, 6 million shares. So far today, 1.3 million shares out here. You've got an A to B equals CD that set it up. You don't have a confirmation of it. Again, I just expect us to really just kind of grind sideways out here. Now, where's the Dow Diamonds eventually headed to? That's an excellent question. Let me give you what that price point is. That's the A to B equals CD pattern that Stevie expects to see unfold out here. Inside the Dow Diamonds, we're looking at a price move probably up into the... Come on, there we go. The A to B equals CD, the uno to uno takes you to 178.47, but I do not believe that is the extent of the price move inside of the Dow. I think you're looking at 18,500 or so. You're looking at 183.96. as the eventual move to the upside inside of the Dow. See, the Dow has not really taken much of a rest. Doesn't look like today is going to be much of a rest day either out here. It is moving up towards that overbought condition. So working its way sideways. You know, when you get overbought, just like at Thanksgiving, you get overfed, or maybe some kind of big dinner that you have or big meal that you have, you kind of get overfed. You just kind of let it move sideways. You know, you kind of move from one cushion to the next cushion on the sofa out here. So the Dow looks long-term very bullish, 185, 184, somewhere right around there. That's what's going on inside of the Dow Diamonds. If we take a look at the SPYs out here, up 94 cents. It's a lot like the Diamonds chart out here. However, there may be one small change. That's the 201.85 level. That's a September 19th high. That's got 94 million shares out there. Price entered that zone with 146 million shares, so it was pushing swing points with volume out there. You're trading above that here today. Again, just really expect mostly a sideways move. The SPYs here, they eventually want to get up into the 210 level. That's your 1-to-1. Stevie says 217 by the time we get to the new year out here. Hey, let's go out to Chicagoland to Robert. Robert, thanks for calling. Thanks for holding. How you doing this morning?
Very good, Steve. Thanks for taking my call.
Hey, my pleasure. Hey, what's the weather forecast for Chicago? I saw this weekend compared to last weekend. That was some pretty strong winds you guys had.
Oh, it was crazy. Lake Michigan was just out of control. Yeah.
Yeah. When was the last time you saw that kind of?
It happens. It happens. It does happen from time to time, and the waves are incredible on Lake Michigan. It's just amazing.
Yeah, I mean, were they saying they were like 6-foot waves or something like that on Lake Michigan?
Yeah. Oh, for sure. Yeah, they actually say it's higher than that. But when you get out there and you look at them, it's pretty violent. It's pretty amazing.
Yeah. Not surfing kind of waves or whatever. Now, so what's the weather forecast for? So that was your first big blast of Arctic cold weather. What's the forecast for this weekend?
Well, actually, Steve, I'm from Chicago. I live in Chicago, and I don't know the forecast for Chicago because I'm actually down in Florida.
Oh, you are? Oh, good. Okay. Yeah. So there's no reason. Well, hey, look, that Chicago weather made its way down to us this past weekend.
Yeah, it did. I know.
You want to take a look at Whole Paycheck, Whole Foods markets out here. Tell me what you're doing, how I can help you.
Well, actually, I called you maybe a month or two ago, and you wanted to see this thing hold at 36, and Whole Foods, I'm sure they report after hours today.
Okay.
So I would take a long position here, and I'd like to hold it for. I'll hold it for a while, so I just want your perspective on that. I would hold it for easily 3 months or 6 months or a year.
Yeah. So, here would be my take as both you and I analyze, Whole Foods. So, okay, so you got earnings today after the bell, as you're pointing out. So you're going to, potentially see some kind of a move out here. And what Whole Foods hasn't done, when you consider where we're at in the markets, right? We're looking at the SPYs, the Diamonds, the Qs, even the Russell 2000. This has been a much weaker than market stock out here. So that's first one way that I would be taking a look at it. Now, we got to also put that in perspective, I guess, in the perspective being, hey, where's it trading in perspective to September 19th, September 18th? Because that's when the market's made a high. So from that perspective, it is trading above that level. So, and that's why I'm just trying to, understand all the noise, because Whole Foods has, made quite a move down from the high in October of 2013. So, up at $65. So I know that you're looking for a long position here. So, it is at least, and it's got a huge supply line out here at $47. And the problem with the most difficult thing in really analyzing Whole Foods is this big, huge gap out here without really any significant signs of strength off of the bottom that have held. we saw that $60 or 36, not 60, the $36 area that you and I were talking about probably took me back to the July 31st time frame when it made a low out there with 24 million shares. And then a few days later, you did see a nice little sign of strength as it moved higher. And that's the level that it's trading at in essence right now. And that's at a price point here of $40.45. So at $40.45 was where that high was. And right now, that had volume, by the way, of 22 million shares. Today you've done 1.2 million shares. In one sense, if you're not long, your better places to have gotten long were down towards that 36-ish type range out here. I don't know that I would encourage you to just jump on board. Now, I have no idea how the stock is going to respond to, any kind of earnings out here. But you are up against a level that it hasn't been taken out. That's a resistance zone. And really, ever since that time period, we haven't seen any kind of additional signs of strength inside Whole Foods. That's the daily chart. Let me put this on a weekly time frame out here. And refresh my memory. The reason that you're looking, is there a fundamental reason that you're after Whole Foods?
No, and no, there's not. There's really not. It's just I'm familiar with the company. But no, there is actually no fundamental reason. No, there's not.
Yeah. No, cool company for sure.
I guess I've made money with it before, and I do follow it on a regular basis. Yeah, go ahead with your analysis then on the weekly. Yeah.
Well, the weekly. The problem with the weekly is that it still shows that resistance line out here. And the weekly, it's the August 4th level. 40, 45 as well. There were 48 million shares. Last week you were moving up into that with half the volume, 21 million shares. So it's not exactly like you are like a NASCAR driver, and you're drafting right behind some signs of strength out here.
Right.
And that would be my concern. If we could find a high volume high or something, that would be cool. But we can't on a weekly chart. What we can see is more like volume off of the highs than we can a high volume high. That's the message of the weekly chart. Again, I can't control how the message is going to respond out here. Look, I will tell you this much. When we take a look at a monthly chart, so here's the bullish side. If we try to find one, and that is after that move down in May, which was with a pretty good volume, 200 million shares. All that we have seen is narrow-bodied candles. Now, those narrow-bodied candles, sometimes some of these are dojis, some are not, some are high-wave candles, some are just simply spinning tops, and a lot of time people confuse all three of those, and it's unfortunate because each of them have different messages. I would say if you just looked at the small-bodied candles, they're telling you that, you may be right, and you may absolutely be onto something because the selling, to a certain extent, has dried up. And so maybe there's nothing more than just really some accumulation going on down here. But, you've made money on this in the past, and you just haven't seen on the daily chart. You saw some signs of strength, and you didn't see anything take off to the upside out here. I'd just be really cautious. Your better buy was down at the $36 level.
Okay, that's wonderful.
Does that help you out?
That very much does, Steve. Thanks very much.
Okay. Hey, call back in tomorrow. Let's see how Whole Foods responds to the earnings out there.
Sounds good.
Okay.
Thank you. I will.
Okay. Bye-bye. Thanks, Robert. Have a great day. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We were talking with Robert about Whole Foods Marketplace. Now, I did put the 120-minute time frame, so we were looking at a monthly, at a weekly, at a daily, just to try to gauge what Whole Foods Markets is doing. Robert mentioned they're coming out with their earnings report after the bell today. The 120-minute chart shows this nice little gradual rising price channel. Price is up against the top of that channel as we speak right now. So if Whole Foods really is in the process of changing its trend out here, what I would say is that the market reaction to earnings on any kind of pullback that would hold the bottom of this little rising price channel. Now, since the earnings are at, we can actually kind of gauge approximately what that price level would be at. So if they're after the bell, so at 4 p.m. today, assuming they come out right around there, you're looking almost at a price of about $39. I'd been mentioning $36 would be an ideal spot. Taking a look at daily time frames out here, and if a Whole Foods market in the post market in the after hours is trading below $39, or certainly tomorrow is trading below $39, and $36, Robert, probably does become the area where if you're looking to take a long position, your back would be up against the wall, and that would be it. If $39 holds, and price and Whole Foods continues to move up from there, then you'd have to say that there's a change in trend that would be underway inside of this equity. So that's how we take a look at multiple time frames to try to get some type of picture as to what might be going on inside of the equity. Now, before Robert had called, we were taking a look, I believe, at the ETF structures. I think we might have left off at the SPYs, if I'm not mistaken, out there. So let's just go back to the SPY here real quickly. The SPYs are up about 0.3%. Up 71 pennies as we speak right now. And the SPYs here are, what is this interesting chart that I've got out here of the SPYs? Oh, I've got the 120-minute chart. So the chart didn't look that familiar to me. Let's take a look at the daily chart out here. The 201.90 is that swing point high from September the 19th. So 201.90. There was volume of 121 million shares, and as price moved up there, moved in there with volume, 146 million shares. You're trading just below it right now. You've got a new daily profile out here. It says 196 would be the support level. My expectation is a market that moves sideways to lower. How much lower? I'm uncertain about. That's just going to have to take a look and look for some patterns, or this could be a timing thing. Between now and the next 2 weeks out here, that's really going to be the entry point. Kind of like Whole Foods trying to find an entry point out here. The SPYs, ideally, I don't know that they'll pull back to 189.82. It would be nice, but I don't know that they'll pull back that far. That 194, 195-ish range is really the target to be looking for inside of the SPY out here. Otherwise, I don't see a whole lot that is really... Now, they'll pull back there. We got a better chance of them pulling back if we can see the ES Mini get below that 2011.75. You're trading at 2011.50 as we speak right now, but this area here is held as support and kind of resistance here ever since Sunday evening. So we need to see a real clear break below that. Then that could set up a nice retracement inside the SPY and maybe get down there. Let's take a look at these. So we looked at the Qs, we looked at the diamonds. Let's go take a look at the Russell 2000, the IWM. So we take a look at the IWM. She's up 37 cents, up about 0.3% as well. We take a look at the IWM. I'd say that the buy on the IWM, if we can get this more than just a consolidation move sideways, if we can actually get a retracement, would be the top of the descending price channel that it broke out of on October the 28th. Where's that take you to? It takes you to about the 110-ish type mark. If you just look at natural retracements off of the low from the 15th of October up to the high that was put in so far, November 3rd, 112 happens to be your 0.382 retracement. 108 happens to be your 0.618. I'd say you're in that range, and you really need to take a look at the descending price channel. That can often act as your level of support out there. So we're just going to have to take that one day at a time out there. The IWM, what the IWM is going to do, the IWM is going to go up, and it's going to go test its highs. And those highs out here are right in the 120 range, okay? They're in the 120 range. And when the IWM busts through those highs, and it will, when it busts through those highs, that's where we're going to see just a huge unleashing, a huge move, because that'll be breaking the consolidation high out here. That it's been in a consolidation zone for 11 months, at least 11 months out there. Now, we have to wait till we get back from the break for me to even remember to finish that thought. And Lord knows, I may not even remember what that thought was. Anyways, give me a call, because I'd like to hear your thinking as well. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 23, S&P is 3, Composites down 6 points, Russell 2000 is up 3. So if you didn't catch the opening show, as the futures were up, you know, what we did was we just simply went and we took a look at 4 different time frame charts to get a feel for what was going on. And what I was pointing out was that, and as I've been pointing out here since Friday of last week, that these markets want to just simply trade sideways. They're going to be extremely frustrating. Now, my belief is that if I can set the right expectation and that you can understand that they're going to go ahead and trade sideways to maybe lower and higher, if you have that frustration, if you understand that, now what that is really called is a consolidation pattern. And that, in essence, is what is forming inside of the markets. Now, the beauty is that it's just simply going to consolidate up at these highs. What's that range? I don't know the range. And so there are people that are going to be able to play this consolidation both to the long side and to the short side. I saw somebody inside the den said that I was frustrating them perhaps because I was talking about the IWM and talking about how the fact that I believe it's going to go ahead and bust out the highs. Now, to keep that in perspective, I didn't say I was going to bust out the highs today. In fact, I absolutely didn't say that. But what I'm saying is going to go bust out those highs after we see our next short-term bottom put into the market, and there is going to be that. And it's a bottom that you absolutely want to buy because it's going to be the second version of the Santa Claus rally. The statistical price patterns that are out here. Number one, you've got a second-term president. The second-year term presidential patterns are out there. They actually support the long-term averages with regard to the way that cycles. You know, people talk about cycles. The Bradley model. The Bradley model, which is talked about a lot, that's nothing more than a cycle. That's just a cycle pattern out there. I would suggest that the cycle patterns that seem to be working better, more consistently, happen to be just the natural and average patterns of the favorable and unfavorable seasonal cycles out there. Those are working more consistently than anything else that I have seen. And so we want to go ahead and we want to respect that. And that's really what those patterns are suggesting. You know, we go to those intraday time period charts to take a look at, where price is moving to. We took a look at this, as an example, we took a look at this 30-minute chart here for the NASDAQ. We saw price was moving higher. Doing it with one of my favorite patterns, price was moving higher with less relative strength. In fact, I'm trying to work out a tool where I can broadcast these signals to all of my subscribers out there at least, so that when they form, if they have an interest in it, they can be aware of these signals on some different time frames out here. Because there's signals that are worth paying attention to. Because the market, it's nothing more than a market that's going to stretch from one side to the next. What we want to do is we want to try to identify those patterns that help us to identify those stretches out here. What I mentioned inside the NASDAQ was that the real piece of information as to any kind of retracement that's going to take place in the marketplace. And for us right now, the signal really has to come at its last swing point, which was yesterday morning, which put in a hammer candle down at the 11:30 a.m. time frame out here. So it's going to be that low where we get a release of information at 41.1975. We get a close below that. The expression on a 30-minute chart, it would certainly be if you're long, you're wrong out there. And then you start looking for other patterns out here inside of the market. So right now, the market is doing what it's supposed to be doing, what it has historically done out here. I would say, and as I mentioned earlier during the first hour, the highs get taken out with any kind of conviction. I'm good enough to go ahead and take those historical patterns and throw them into the trash, and that's when you go ahead and you punch your ticket, you hop on board, because these markets, like I had mentioned, the IWM, what it wants to do at a minimum is it wants to go back up and test the highs. Why? Because it couldn't bust out the lows. It tried to bust out the lows. It did bust out the lows, and then it gave us the first signals, the signs of strength to say, no way, I'm going to go ahead and get back into that party. Now, it's the Russell 2000, the IWM, that in essence has been consolidating since October, over a year. Son of a gun, I said 11 months. I lied. I didn't lie. I misled you. I didn't mislead you. I just didn't go back and remember that it was October. So the IWM, the Russell 2000, been consolidating for over a year now out here. Couldn't bust them down. Going to go ahead and try to bust them up. If you're short, you're short. To get you stops out here. I think that what you're looking for as well is the next place to put on a long position out here. And then you're going to make a decision right around the 120-ish level out here, the 121 level. You break through that, then it offers the bulls real opportunity, and you're in the favorable seasonal cycle. You get above 120, then that says another $13.50 or so added to the IWM, saying you get to the 135-ish type range, and I could actually envision seeing that happen before the end of the year out there. And that would be my expect. Now, does it have to be the end of the year? No. But between now and a year from now, yeah, I could absolutely see that take place. And I don't see any reason why once it gets above that consolidation that it can't actually make that move pretty quickly out here. So that's that. As I know it's kind of a larger overview, but I don't, I like people to, sometimes I do a better job when I try to add more clarity as to what my thinking is and the reason why as I take a look at the stock charts and stock patterns out here. Now, what we can say is we start to get, so I gave you some of those retracement levels, for example, inside the NQ. Now, what we could also say is you can also use the VIX index. And if we take a look at the VIX index right now, which is trading below the 50-day exponential moving average, that is priced out at 1587. If we get above the 1587 zone, you close above it, not just spike it, but you get above it, you close above it, then you can start to see that you got those maybe deeper retracements coming in. Maybe you get those 0.618 retracements coming from low to high out here. But at this stage, the VIX index, the volatility index, remains in nothing but strong like bull condition out here. Liquidity, and what that does is that stops price moving, much lower. So when we took a look at the NQ, if price were to go visit that hammer candle and the VIX is still below the 50-day exponential moving average, it would be telling me, hey, that's probably the extent of the move out there. Then you start to see the buyers come back in and support that level. The VIX trading above the 50-day, maybe a little bit different story out there. So that's what's going on with that, and I think it's something that we all should be paying attention to. I take a look at the summation indexes for the Dow, for the New York Stock Exchange, for the composite out here. I don't see anything of any kind of significance to really report on here. You just really have some sideways movement. What have we seen here in the Dow right now? That candle inside the Dow looks like a little shooting star out here, but again, really, who knows what it ends up being at the end of the day. Just really small-bodied candles, spinning top type candles. I know they look like dojis. I know they smell like dojis. They're really not. There's still too much price movement inside of the Dow here for that to truly, if you're going to go back and take a look at true technical a candlestick charting out here. The candlesticks that you're looking at inside the Dow are just nothing more than small-bodied candles. Just telling you that the market is tired out there. That is taking a look at the Dow. The summation index, maybe the summation index, we see the pullback get down to the zero line, and maybe that becomes the area where you see a buying opportunity inside of the Dow. Just got to kind of take things one day at a time, one step at a time. Okay, so that's really the overview of where I believe that we're at inside of the markets out here. And so let's pay attention to the one cycle pattern, not the one, but let's listen to a cycle pattern that is really working out there. And let's pay attention to some of these liquidity type events such as the currencies out there, because there is no understating that. If we take a look at the Euro-Japanese yen, it's made that butterfly pattern. There's no reversal. That butterfly pattern was a 1.272, took you up to 143.14 out here. It actually took you up a bit higher than that. If this level holds, that then sets up more of this consolidating market retracement type of thing. But if we take a look at the divergent patterns or lack thereof, let's go look at those divergent patterns. See, there's a couple of patterns out here, I believe, that are in play that also suggest that we start to see this consolidation sideways, maybe move down inside the market before it resumes its move higher. Of course, that one pattern I'm looking at, this screen here has gotten a little bit too cluttered for me, but eventually I'll find it. Here it is. It's the General. All right, let's go take a look at General Electric out here. Nothing better than GE, than the correlation between GE and the Dow. So if you're watching us on Tiger TV and we take a look at GE and the Dow, the GE is signaling to us that the move higher here hasn't yet caught on, at least in its stock chart. And that says it's something worth paying attention to, because GE will typically, when you see a divergence, in this case here, since the high that we're taking a look at that GE put in on October 28th, it's actually been making some lower lower highs. Now, not by a tremendous amount, but by enough where you take a look at the Dow, it has moved higher since that time period, significantly higher. So we're seeing a divergence in that case there in direction of price. And GE is the one. And if we can go back even further, right, we can take a look at these declining tops out here inside of GE. I can pull this line back down even further, I'm pretty sure, if I take a look at it. So take a look at that. Here's a line of diverging tops inside GE that take you back to June of 2014 versus, let me do that same thing up top here. Let me go ahead and expand this out. So there we go inside of GE. And so, in essence, there's your diverging tops along the highs. Now, to me, this is absolutely not a signal like the top is in, and that's it. Markets are going to go cascading and crushing lower out here. No, that's not. What this correlation chart is suggesting to me at the moment is that this little sideways consolidation and move lower is really what the market should be doing. You got GE giving us the message of that. Now, competing out here happens to be the Euro-Japanese yen. The market's really all about currency pair, and there is no divergence out here. You got the Euro-Japanese yen, you got the S&P futures moving higher. There's no divergence inside this pattern. I would give this one more weight than even the GE type pattern out here. We don't have that. The Euro-Japanese yen, unless we see some kind of major sell-off inside that currency pair, retracement would be normal just to refuel its rocket ship, for right around Thanksgiving, before Thanksgiving, somewhere right in that range before the markets decide to take off topside. Now, a perplexing chart, I believe, and I think it's Mike in Thailand. So, Mike in Thailand, if you're calling, this chart's for you. I think we had talked about it at one point in time. Where is it on my screen out here? Come on, where is it? Oh, it's right here. So Mike in Thailand had called because he was looking at junk bonds. Now, I can't recall what he was trying to do, maybe short junk bonds or something like that. And just as we took a look at the General Electric chart versus the Dow, this is a correlation between the S&P 500 and a high yield income fund out here, HIO. But you can use a number of different funds. They're all going to, in essence, show you the same thing. What they're going to show you, typically these high income funds, they move in correlations, kind of like a little bit of a tango with the S&P 500 out here. And when you start to get off, when the two-step starts to get off, it would be like me, you dancing with me. I don't have the best dance steps out there. Individually, I can do the monkey, but in any event out here, if we take a look at it, that was just too much information. You didn't even need to have that visual. But if we do take a look at the direction here of the high income opportunity fund, the Western Asset High Income Opportunity, HIO, I like to use that as a correlation because there's plenty of liquidity inside of that ETF. And we can see that this has been making lower highs out here. Now, I will say because, look, Santa flew me up to the North Pole for his annual meeting out there. He said, hey, he said, Steve, I like your work. You're doing a lot of work out there. You're one of my elves, so keep providing all that great information to all those tigers and tigresses out there. But he sent me back, early Friday morning when the markets moved up, and he said, everybody, they're listening to you about this major bottom that was put in October, and you gotta tell them that, okay, now is the time for a bit of a pause out here before Santa starts his next rally out there. And of course, I said to Santa, well, you got to get these guys in the Western Asset High Income Opportunity Fund to follow along with you. That thing needs to start moving higher out here. The correlation needs to get back, but it's not out here. So it says retracement, correction, some kind of thing. Not that the high is in place or anything along those lines. So that's how I am reading things. Now, if we take a look at let's look at this chart out here. Here's the chart of the direction shares out here. Santa did not get eaten by any polar bear. If we take a look at, but very cute out there. If we take a look at, of course, Santa's friends to all, even polar bears. In fact, the polar bears, they come back on TV, right? Coca-Cola is going to be putting that Christmas commercial back on. They got to be putting it on sometime soon. If we take a look at the chart here between the NUGT, the nugget out here, I can see here, I've got several screens. I'm looking at the euro right out here, trying to form another bottom out here. We'll have to take a look at that because that really brings us back to the U.S. dollar index, gold, the gold miners out here. This is Steve Rhodes. This is TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Since we got 4 minutes here to kind of wrap things up, had a request to take a look at 3D Systems. I've got up on my screen Stratasys, SSYS. So if somebody's looking for decided between one of the two 3D companies out there, I'd have to say the Stratasys chart looks much better than the 3D System chart out here. Now, in the case of Stratasys, we've seen a gap down this morning. Volume behind the move, 2.8 million shares. Its last sign of strength out here at 8.2 million shares. Now, it has not gotten down to the bottom of that. I suspect that it will, and if it can get back to the bottom of that, meaning somewhere around the 95.38 to 98.71 range, that might be a place to take a look at a long position inside of Stratasys out here. A little bit of a bummer today with regard to its move down, but if I take a look at 3D Systems out here, DDD, what you're going to see, I don't see any kind of sign of strength that it's moving back into. If you take a look at 3D Systems, it looks like this thing may be headed back towards its lows here in March of 2013. So I would say SSYS would be the one to be paying attention to. It's the chart that looks to be about the best as we speak right now. Okay. Now, during the break, I was talking about, or before the break, I was going ahead and we were taking a look at the correlation between the U.S. dollar, gold, and the gold miners. I think I might have the HUI up. I don't recall which one. But you've got gold trading off $20. Silver's down 42 cents. The U.S. dollar index, what's she doing here? Up about 420 ticks as we speak right now. But what is interesting here, we'll see how this plays out. You've got the GDX. That's what I've got up on my screen here right now. If it closes today somewhere above 1723 and doesn't move much higher, you'd actually have not a doji candle, but you would have you'd actually have a hammer candle out there. Now, you'd have a hammer candle. We had price moving lower with less relative weakness. That's when it formed this low out here on November the 1st. That low is being tested. It's being tested today, and it's being tested with potentially a hammer candle. That would be a bullish reversal signal out here. It is potentially. It's either in the seventh or the third wave to the downside out here. I would say a trade would be pretty easy. If you get a hammer candle today inside of this equity, there you got the hammer candle at 1721. Then what that would say is your stop inside of this trade in the GDX, it would be a stop below today's low. I mean, you could use an actual 1 penny stop below today's low, which is 1663 out here. So it's an area for us to keep our eye on, keep paying attention. Remember, the market is nothing more than stretches to the upside and the downside. And when it stretches to the downside and it does it with less relative weakness out there, it's something you want to keep your eyes on for a trade. Just like this morning when we were taking a look at the sign of the strength area inside the market, and we use a 30-minute time frame. This works on all time frames out here. You just put it together with a number of tools. This is what the market's looking like. Hey, they're open, and time to celebrate the good old party that was happening inside of the markets. But no, that's not what we saw. Why didn't we see that? Because the markets were giving us an indication that the move higher just really didn't have the energy. That doesn't mean it won't have the energy here. And we can see now price here close. Didn't get back yet to the hammer candle. And that was the hammer candle out here at about 11:30, between 11 and 11:30 on yesterday morning out here. But so expect a market that's, unfortunately, you're going to hear me say this until it proves otherwise, a market that is going to frustrate all heck out of you. There's going to be something each morning and each day for the bulls and something for the bears out here. And neither are going to win because the market's going to consolidate sideways. Stay tuned, though. Our man Basil Chapman, he's up next. It is a wonderful Wednesday. You got Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show. Have a great Wednesday, folks. Look forward to seeing you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.